If you're thinking about buying a home in Los Angeles, you've probably heard about down payment assistance programs. Unfortunately, there's also a lot of confusion surrounding them. Some people think they're free money, some believe they're only available to low income households, others assume they won't qualify without ever speaking with a lender. The truth is, there are several programs available, each with different requirements, benefits, and trade offs. Some provide grants, some provide deferred loans, and some involve sharing a portion of your future appreciation. In this video, I'm going to explain several of the most common programs available to Los Angeles homebuyers, discuss the pros and cons of each, and help you understand which options may be worth investigating further. Before we begin, I want to mention that I am a realtor, not a mortgage broker, lender, CPA, or attorney. Program guidelines, funding availability, income limits, and qualification standards can change. Always verify current information directly with a qualified mortgage professional. If you don't already have a mortgage broker, I'm happy to provide referrals to experienced professionals who can help determine which programs may be available to you. Let's begin. The first thing to understand is that not all down payment assistance programs work the same way. Most fall into three categories. And the first category is grants. Grants generally do not require repayment if you satisfy the program requirements. The second category is deferred loans. These programs provide money for down payment or closing costs and often require no monthly payments. Repayment usually occurs when you sell, refinance, or transfer the property. The third category is shared appreciation programs. These programs provide assistance today, but in exchange, the program participates in some of your future appreciation. Understanding which category a program falls into is one of the most important things you can do before applying. Let's start with programs that generally do not involve shared appreciation. One of the most common programs worth investigating is CalHFA MyHome. CalHFA is California's state housing agency. Depending on the program and your qualifications, assistance may be available for your down payment and sometimes closing costs. One reason many buyers start here is because CalHFA is widely recognized and accepted by many participating lenders. Pros include statewide availability, deferred repayment, and the ability to potentially combine assistance with other programs. The drawbacks are that qualification requirements apply, assistance eventually must be repaid, and program terms can change over time. For many first-time buyers, CalHFA is one of the easiest places to begin their research. Another option is the Chenoa Fund. This program is often paired with FHA financing and may provide down payment assistance, including certain forgivable options depending on the version available at the time. Pros include assistance for buyers with limited savings, potential forgivable features, and a transaction process that is often simpler than some city-administered programs. Potential drawbacks include FHA loan requirements and program structures that can vary. Next is GSFA, the Golden State Finance Authority. GSFA offers several programs that may help with down payment and closing costs. Certain programs may also provide enhanced benefits for teachers, healthcare workers, firefighters, law enforcement personnel, and other qualifying occupations. Pros include statewide availability, occupation-specific opportunities, and assistance that can be used toward down payment or closing costs. Now let's discuss programs that may involve shared appreciation. These programs can sometimes provide significantly larger amounts of assistance, but buyers should fully understand how they work. Dream for All is probably the most talked about program in California. Depending on the program version and available funding, qualified buyers may receive assistance equal to a significant percentage of the purchase price. For some buyers, that can mean the difference between buying now and waiting years to save a larger down payment. However, Dream for All generally involves shared appreciation. Here's a simplified example. Let's say you purchase a home for $750,000 and receive $150,000 in assistance. And 10 years later, you sell the home for $1,050,000. The property appreciated by $300,000. When a repayment event occurs, you generally repay the original assistance amount plus a share of the appreciation according to the program guidelines in effect when you receive the loan. The exact formula can change, so always verify details with a qualified mortgage professional. Some buyers are comfortable with this trade-off because it allows them to purchase sooner. Others prefer to retain as much future equity as possible. Neither approach is necessarily right or wrong. The key is understanding the trade-off before making a decision. Next is LIPA, the Low Income Purchase Assistance Program offered by the City of Los Angeles. This program can provide substantial assistance to qualified buyers. However, buyers should understand two important considerations. First, LIPA generally involves shared appreciation. Second, city approval requirements can significantly increase transaction timelines. In some cases, buyers may wait weeks or months for approvals and processing. This can create challenges when competing against buyers using conventional financing. A seller may have multiple offers and may not want to wait for city approvals. As a result, these transactions can experience higher cancellation rates than traditional financing. MIPA, the Moderate Income Purchase Assistance Program, operates similarly. Like LIPA, it can provide significant assistance. Like LIPA, it generally involves shared appreciation. And like LIPA, city approvals can create longer timelines and additional complexity. Now let's talk about specialized programs. Veterans should always investigate available VA and CalVet opportunities. Many veterans discover they qualify for financing options that are superior to other assistance programs. Certain GSFA programs may also benefit teachers, healthcare workers, firefighters, first responders, and law enforcement personnel. If you work in one of these professions, be sure to ask your lender about occupation-specific programs. Let's look at two quick examples. Imagine a nurse earning approximately $110,000 per year with $20,000 saved. Programs worth investigating might include CalHFA, GSFA, and Chenoa. Now imagine a family earning approximately $85,000 per year with limited savings but flexibility regarding timelines. Programs worth investigating might include Dream for All, LIPA, or MIPA, depending on eligibility and available funding. Here's another important point many buyers don't realize. Getting approved for a program and getting an offer accepted are two different things. Some assistance programs require additional approvals beyond the lender. That can extend timelines and sometimes make sellers nervous. In competitive situations, this can affect how your offer compares against other buyers. This doesn't mean you shouldn't use assistance programs. It simply means you need the right expectations and strategy. If I were researching programs today, I would generally investigate them in this order. First, CalHFA. Second, Chenoa Fund. Third, GSFA. Fourth, veteran-specific programs if applicable. Fifth, Dream for All. Sixth, LIPA. And seventh, MIPA. Not because one is always better than another, but because buyers should understand both the assistance available and the long-term impact on future equity. The most important takeaway from this video is simple. Don't choose a program first. Determine your eligibility first, then compare your options. Program guidelines can change. Funding can become unavailable. And not every lender offers every program. And if you'd like help understanding which programs may fit your situation, I'm happy to connect you with experienced mortgage professionals who can review your eligibility and explain the most current options available. Once you've identified the right financing strategy, I can help you determine which homes may realistically fit your goals and budget. I'm Barry, Realtor with Barry Green. Thank you for watching, and I'll see you in the next video.